A very good evening, everyone. We'll start the session in another 30 to 40 seconds. More participants are expected to join. A very good evening, everyone. Welcome to After Hours with William in India. This is Rajasekhar Kongari, Equity Research Analyst at William in India. Uh, Disclaimer here is that whatever the stocks we discuss in this podcast should be taken only for educational purpose or not intended for any investment advice. Let's look into what happened during the day. Nifty opened on a flat basis, nearly at 16,630 level. However, in the first 10 minutes, Nifty was sold and around 50 points it declined. And during the day, most part of the day, it traded in the sideways session around this zone, that is 16,550 level. In the last 1 hour, it was again sold into, and Nifty closed uh, at 16,460 level. However, volume during that today's session was on the lower side compared to yesterday's session. Hence, we are not considering today's session as a distribution day. Yesterday, we had a distribution day on Nifty. That is the first distribution day on Nifty. Currently, distribution day count is at 1. Today, Nifty escaped distribution day thanks to lower volume. However, we are continue to be cautious while adding stocks to our model portfolio, because Nifty is not able to find the required momentum. That is, we want the Nifty to reclaim its 200 DMA, and we want other leading stocks to also to break out from their bases or reclaim their key moving averages. That is not happening at this current moment. That is why we are more cautious while adding stocks to our model portfolio. You can see Nifty closed near the day's low, which is a sign of weakness on the technical side. So we should be watchful for how the Nifty opens tomorrow and how the market plays out in the tomorrow session. This is a Nifty's daily chart taken from Marketsmith India. You can see here this pink line is a 100 DMA. That level is breached during the session, and Nifty closed below to 100 DMA. That is a sign of cautiousness. 100 DMA has been historically a good support for Nifty. That level is given up today, so we should be more cautious while going ahead. However, Nifty is trading above its both its 21 and 50 DMAs, which are short-term moving averages. The long-term moving average is 200 DMA, is at 70,000 level. Nifty has been trading below that level for the last 3 months. The level is not reclaimed. We would want the Nifty to reclaim this 17,000 level and also its 200 DMA. Then only we can see proper momentum in the overall market. Then we will be seeing more gains in our stocks as well. Talking about today's action, as mentioned previously, today Nifty's action, it closed more than 0.2% lower, but the volume was lower than the previous session. Hence, it escaped distribution. Currently, distribution day count is at 1. Any further accumulation of distribution days from here, distribution day count of 3 to 4 will downgrade the market status to uptrend under pressure. In such a scenario, will halt our stocks, adding stocks to our model portfolio. Will turn more cautious. Currently, we are adding stocks to our model portfolio, which are giving strong breakouts which are giving technically strong breakouts. And the Nifty 50 index, Bajaj Finserv is the top gainer with 5% gain. There is a news that Bajaj Finserv board is about to consider the stock split. That is the reason the stock has advanced more than 5%. Also, the Bajaj Finserv is expected to announce its results today as well. Other major stocks are JSW Steel, which have closed more than 1% higher. On the downside, we have Infosys, Hindustan Unilever, which closed more than 3% lower. Axis Bank, which reported its result, has also closed more than nearly 3% lower. Dr. Reddy and Kotak Bank are other major decliners, which closed 2 to 2.5%. This is a slide we have taken. You can see the major attrition rate which is happening in the IT industry as a whole. Three major IT companies, which are Infosys, Wipro, TCS, are benchmarked here. Infosys has the highest attrition rate among the three major IT companies in India. You can see Infosys attrition is at 28%, while compared to TCS, which is at less than 20%. When the attrition rate is higher, employee cost will significantly increase because hiring new talent is very difficult in the market. So employee cost will significantly be higher for Infosys compared to TCS. That is the reason we are seeing sell-off happening in the Infosys stock today. Talking about the major sectoral view today, except for Nifty Media, which closed 0.9% higher, all the other sectoral indices have closed lower. This indicates that the selling which happened during the session is a broad-based. You can see starting from banks, auto, everything, metal, pharma, everything have closed nearly 1% lower. This indicates the selling which happened today is a broad-based selling. IT has closed nearly 2.8% because of Infosys, which has closed 3% lower. IT has been the laggard for the today's session. Talking about the key stocks which announced the results today, Asian Paints has reported very good set of numbers. It has the results have beaten street estimates. You can see here, revenue has increased 54% year-on-year basis to 8,600 crores. Also, you can see on the technical basis, Asian Paints has reclaimed its 200 EMA, that is the black line. The stock has been trading in its consolidation base for the last 4 months. We would want the stock to reclaim pivot, that is another 14% from here. Then we might see a good buy opportunity in this particular stock. Other key parameters to look into for this stock are master score is at 47, which is slightly lower. We want that score to be higher. Price strength is at 56. However, the price RS line has been on the upward trend. By the time the stock breaks out from its base pattern, we can expect RS to be at 70-80 level, which is a very good rating according to us. Other ratings are pretty much very good. That is A by D rating of B indicates a good buyer demand for the stock. One concern is that number of funds invested in the stock has come down slightly lower in the current quarter, that is the March quarter. That is very a slight sign of cautiousness in this particular stock. Other major company which has reported results is that Bajaj Auto. It has also reported a good set of numbers, came in above consensus estimates. However, you can see the range, which is not a very good sign. Revenue has increased 8% year-on-year basis to 8,000 crores. EBITDA has grown 16% to 1,200 crores. One thing to observe here is that chip situation, which has been a sign of concern in the auto industry has improved in the current quarter, which is a very good sign for most of the auto companies because of new supply sources which were developed during the quarter. And number of funds has increased significantly during the March quarter from 718 it has increased to 744, which is a very good sign. That is, new institutional funds are taking positions in this particular stock. For the chart of the day, we have taken PSP Projects. You can see here, stock has broken out in the last 1 week. However, it has been not able to find the proper momentum. It is trading near its pivot of 640 level. However, the stock has very good set of ratings. You can see here, a master score of 71, EPS of 93 indicates a strong fundamental company. Price strength is also at 80, indicating a strong technical setup. You can see here, the stock has made lots of blue dots in its uptrend in the last 10 to 20 sessions. That is a very good sign. Also, the volume on the updates is also significantly higher than the 50-day average volume. That indicates strong institutional funds are taking positions in this particular stock. Also, you can observe here, EPS has grown significantly, starting from double digit to triple digit growth. Sales have also grown likewise, that is double to triple digit. That indicates very strong growth company, which is having a good technical setup. Number of funds you can see for the last 1 year, from starting from 20 in June 2021, it has increased to 39 to in March 2022. That is nearly 100% of growth in number of funds. That is a very good sign. That indicates very 20 new funds have taken fresh positions in the particular stock. We want these kind of stocks making a good proper base patterns and breaking out of their base patterns before adding them to our model portfolio. Thanks for joining our after hours. Hope you had a very good trading session. We'd like to see you again at tomorrow's morning pre-bill. Thank you.